Welcome to This Week in Money. I'm Jim Goddard. Today, Bob Hoye from chartsandmarkets.com tells us the markets ended the week on a positive note. However, the question is, how long will this bullish market last? Martin Armstrong, the founder of Armstrong Economics, gives us his opinion on a wide range of topics, from the world economic outlook to gold and real estate. Inside Track President Eric Hadik examines the various cycles that affect the markets and human violent behavior. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Bob Hoye right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Bob Hoye. He's a market historian and chief investment strategist for chartsandmarkets.com. Welcome back to This Week in Money, Bob.
Here we are, Jim, and let's take a look at This Week in Money.
Bob, did the markets end up on a positive note?
Well, actually, it was. You can call it a good week. So we've now had many weeks since the plunge down to Christmas, and this is what we were looking for, because that liquidity problem that was, we always say, suddenly discovered in the fall. In our work, it was expected to be in the fall, and perhaps it could run as late as Christmas, and it did run as late as Christmas, and then it sort of cleared the air, and then a rebound out until around March has been possible. This would be helped by an improvement in industrial commodities, such as copper and base metals and lumber and crude oil. Yeah, crude oil. And these would be improving as well. Then the other part of the package we look at is what's going on in the credit markets, which would be the yield curve, which is the difference between long-dated bonds and short-dated ones, and also the on credit spreads, which is the difference between high-grade bonds and low-grade bonds. And these were likely to be positive out through until March, which we're getting. And that would be the main highlights, is that the general market and the things that go with it, such as in the credit markets, and the industrial commodities were likely to improve into around March, which we're getting to now. And what one wants to do is kind of look at things and ask yourself a question: is it up when it should be? Yep. Are there signs of speculation? Actually, there are some. Of our special technical tools are showing signs of speculation. And then you want to look at some other things, like market sentiment is getting pretty bullish, and momentum's been good. So what we want to do now, Jim, is kind of look for an ending action somewhere possible over the next 3 or 4 weeks. For regular investors, this may sound a little different, but gosh, when you're in wild financial markets, you have to kind of look to what works. And I'm telling you, one thing that didn't work for many people last year was to look at earnings and say, yep, they're good. Then listen to the Wall Street brokers telling them that the stocks weren't overpriced. And then the other backup in that world is that, yes, the Bank of Canada or the Federal Reserve System with central bankers, yep, they're there to prevent bad things from happening. So if you live in that world, you would be surprised by the drop in stock prices and whatnot that we saw in the fall. But with our work in credit markets and history and seasonality, we were actually looking for, as we called it, a liquidity problem to be discovered in the fall. And there were certain things that led into that, and one of them was the change in credit spreads, and that was late this time. In 2007, we had a couple of months lead to the top on those ones, but this was, it came in early October, and that then pushed off the decline. So there's a practical way of looking at the markets, and then there is the conventional way. And the conventional way is that sound management at corporate level and always sound management at the central bank level is going to make your investments risk-free. And I think that's too reliable.
You don't believe that's very reliable?
Well, markets have shown it's not too reliable. So what we're dealing with here now is what works and what works for us. And that then got us to looking for some very positive action out until March, which we're getting. So what we want to do, Jim, is just kind of monitor it over the next few weeks to see if the technicals get pushed a little further and wait to see how long it takes, having reached technical excess, before the rollover comes. And that's on the stock side. And then there's always the side that kind of looks at the precious metal sector, and we've done some work on that. And the main thing with precious metals is when you're in a great big financial bubble, the real price of gold doesn't do so well. And neither do the gold stocks. They're poor performers when you're in a great bull market, and which has been the case this time. So we were looking late in the year for bottoming action in the gold sector, and it's been acting pretty well since November. But I think it's kind of due for a correction as well. So the timing on these things can be rather tricky, and when you've got the right sort of seasonal analysis, the right sort of cyclical analysis, and then you add that up with some technical work, it makes them for some fairly good experiences. So we'll just wrap it up, Jim, and say it's been a good week. It's been a good 2/3 of a quarter. The quarter won't be over until, of course, the end of March, and we'll be watching for opportunities there. But I think it's a rebound within a possible post-bubble contraction. And we should define that a little more, is that in the past you've had fabulous, big, huge financial bubbles, of which 2018 might have seen the conclusion to it. It certainly led to a sharp contraction or sharp hit in the markets in the fall. And I think this is just the first sort of rebound out of a liquidity problem. And but we'll know more after March, maybe April, of where this market's going to be going, and then we can talk again about it.
Bob, it sounds like keep your eyes open and keep your powder dry.
Well, in Vancouver, how do you keep your powder dry?
Thanks a lot for being on the show, Bob.
Thanks a lot, Jim, and anytime.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Coming up, Martin Armstrong, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Martin Armstrong, founder of Armstrong Economics, online at armstrongeconomics.com. He's speaking to us from sunny Florida. Martin, welcome back to This Week in Money.
Well, thank you for inviting me.
Martin, first off, you have a conference coming up in Rome, May 3rd and 4th. What's it all about?
Well, we've timed that basically with the real crisis that's going on in Europe. I mean, a lot of people have heard of, like, Brexit and all, but what they really haven't, heard of so much is that there's a real rising discontent throughout Europe. When I go to Germany, I go down to Bavaria, and they're basically saying, look, we're Bavarian first, German second, They still celebrate the war with Prussia, So, it's very interesting. I mean, Italy, everywhere you go, it's the structure of the euro is really coming home to roost. And the separatist movements are rising. And, May is going to be the major elections, for the parliament there in Brussels. And what you are looking at is a significant rise in this basically anti-government, anti-EU, foundation that's building over there.
Is that something that's going around the planet, nationalism?
Yes. I mean, it's largely because of all the socialism that we've had since World War II. And it just, it fails. It doesn't work. I mean, you take, the biggest problem is really with state employee pensions. You have some cities in Illinois that it's so out of whack that you have like 400 people on pension and 100 people still working. And they've never put the money away for this. So they've always assumed that the population will always grow. There'll be enough of us schmucks out here just to tax, until to cover for everything. And that's what's failing. You got half the municipalities in Germany going, are belly up. You got the same thing going on in the States. You have, governors taking ads out in each other's states and saying, here, come here. Texas took an ad out in New York and saying, hey, you want to move? Come down here. We don't have income tax. So you're having state governors even starting to war against each other. It's just really, it's a system that is not sustainable, and nobody will really take a look at how to even address it. What's going on is effectively, it doesn't matter what government we talk about, but they're all doing the same thing. It's just like, how much do I need for next week? That's all. Raise taxes to cover that. What about the future? I'll worry about that when it comes.
The Dow and the S&P 500 recently had a 20% correction. Are we still in a bull market or starting a bear market?
No, longer term, it's still a bull market. There is really no choice. I know you have so many people keep talking about, the end and the crash and all this sort of stuff. But, I mean, capital has to go someplace. And effectively, the big capital has got no place to go but the equity side, because government bonds are in trouble everywhere. And, the Fed has come under a lot of pressure from other governments to, please stop with the raising of interest rates. Because effectively, you have emerging markets in trouble. Europe can't raise interest rates. Japan is really in serious trouble. And the U.S. economy's been the only thing that's been holding everything up, and it's starting to turn down as well, and will probably decline a bit more into 2020.
Do you see a recession happening out of it, or just a slowdown?
It's more of a stagflation where in the 70s it was the oil price shock. So prices were going up, but not necessarily economic growth. All right, so that was called stagflation. So prices were rising, but not because of demand. And that's what we're rising, again. But the cost this time, instead of oil, it's government taxation. So it's, they keep raising taxes and they don't, get it. It's like the more you raise the taxes, that means the less people have to spend. They spend less, the economy goes down. It's simple as that. And the socialism has just gone off the charts. I mean, you have that girl from New York, Alejandra. I mean, she was celebrating the fact that Amazon said, okay, fine, forget it. We're not going to open up in Queens. And it's like, oh yeah, we scored a victory for the working man. Oh, excuse me, now you're not going to get 25,000 jobs. So that's good. I mean, even the governors came out and said, I think some people got this wrong. And, so, you can't celebrate things like this and expect companies to keep raising salaries and all of this at the same time you're raising regulations and taxation.
How is the U.S. dollar looking?
It's still really the only game in town. That's the biggest problem. The stock market recovered, substantially, but that was because the euro has come down. I mean, all the buying that came in here was from primarily from Europe. You had Americans saying, oh, that's it, it's going to crash, that's it, going down 40%, and then rises 20%, and everybody's scratching their head. But the euro came down dramatically, so did the British pound, and it's like, it was a sale at Harrods. It's like, hey, this is pretty cheap.
How is the Canadian dollar looking?
The Canadian dollar is still in a more or less holding pattern. It's still in a bearish trend, but it's not going to, completely fall apart, mainly because Canada will benefit to some degree with the U.S. dollar from the capital flows fleeing, basically Asia and Europe. So, that's pretty much it. I mean, in Vancouver, they went after all the Asian money coming into real estate. So, that's fine. I mean, you don't realize what they're doing when they do this kind of stuff. It makes the overall real estate market decline. And all the studies show, if your house goes up, doubles in value. Maybe your salary didn't, but you spend more because you feel that you have more money tucked away. When the value of the house declines, and you still earn the same amount of, in a salary, you spend less because you feel you lost money. So these politicians are saying, oh, we have to make housing more affordable. I mean, it's just an excuse to tax somebody, really, because it really contributes to the economic decline when real estate goes down. People simply spend less.
Governments always claim they're trying to make housing more affordable, but with housing starts down, how do they claim to be doing that?
They don't. They just make up stuff, honestly. It's all about taxes or whatever. I mean, just look at France. I mean, as soon as you had the Yellow Vest movement start over the global warming tax that he was putting in on gasoline, and he forced it, to back off, then what was the first thing he did? oh, well, gee, there's going to be less revenue in the budget, so we have to raise taxes on something else. So was it really about taxes, or was it, really about trying to save the world, environment? Right there in Vancouver, you put on a surcharge for schools, but the money goes into the general pot. Doesn't go to schools. They can spend it on whatever they want. And this is standard operational procedure. They basically say something and say, oh, we're going to, it's for children or whatever, and it never really gets there. Australia, they had a great one. I mean, they put up this slogan that they're going to tax the rich. We're going to tax their Ferraris, their fur coats, and their French wines. Everybody cheered. Yeah, go get them. Okay, so they put in the luxury tax. What was in there? All electrical products. So you wanted the TV, that was suddenly a luxury. You wanted a heating pad because you got a bad back? Oh, that's a luxury. I mean, anything electric was suddenly now a luxury tax. That's the way it always is. I mean, every time I went to Australia, they gave me Australian wines. I never had French wine. The Australian was even better. Never saw anybody with a fur coat in Sydney. It was too warm for that. and Ferraris, they were already 100% taxed. So I think I maybe saw two in the country. That was about it.
Yeah.
It's just, they're great slogans, but that's all they are. And you take Elizabeth Warren, she run for president, and what's her platform? Oh, the rich don't pay their fair share. We're going to put a wealth tax in. The 3% wealth tax means that even if you didn't make any money or lost money, you still got to pay 3% to the government of what you have left. And so over a 10-year period of time, you'll basically bankrupt everybody. I mean, wealth taxes don't work.
We'll have more with Martin Armstrong when This Week in Money returns.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Martin Armstrong. Martin, could a gold and silver bull market be just around the corner?
Yeah, it's not too far off yet. I mean, most of the people that have been constantly pitching that, they talk about, hyperinflation in the Fed and creating, quantitative easing. None of that really means anything. If you go back really to the 1980s, what was it? What made gold rally to begin with? And that was simply really a cost push inflation, which created stagflation. And as long as people saw that prices were always going to rise, then they ran out and they bought. All right, so they really lost confidence in government. The OPEC whole issue, it really, created a complete collapse in government, and that's what Ronald Reagan was basically elected. And Jimmy Carter just never, he seemed like a complete idiot at the time. That's really what you're looking for. The question is not what the Fed will do with quantitative easing or anything else. It's basically at what stage in the game do people no longer trust government? They no longer believe in whatever they're saying, and we're approaching that period. And it seems to be coming up, I think, really from 2020 starting forward. And we're talking about the average person on the street. We're not talking about the gold bugs and things of this nature and people who are actively investing. It's the people standing in line at Starbucks. All right. So, when they start questioning what's going on, that's when we get into this situation where the stock market will rally, the metals will rally, everything as an alternative to government. And I've been saying that there'll be like a great alignment. And just look at what's happened. Gold has rallied, but what has also rallied? The stock market. Okay? They're not moving opposite. This is reflecting what I'm talking about. It's when people begin to lose faith in government, then they start looking at alternative investments. And that is tangible assets and basically equities. I mean, even real estate now that, it's on the decline because of regulation. They're going after it, taxation. Though real estate is, we all need a place to live, but it's what I call it's not a movable asset. So historically, like when Rome fell, whatever, what happens? People just walked away from their property. That was it. At the peak, it had a population of 1 million people. It took basically, London didn't reach that sort of a population until the Victorian era. And what did Rome end up with? It fell to 15,000 people. People just walk away. Taxes, it's crime, whatever, and at some point in time, you just pick up and leave. And that's the problem with real estate. The other assets that are movable are the ones that tend to hold up during these types of crises. And so that's one of the reasons why the stock market's doing well. And some people will buy gold. Other people will buy equities. Some people will buy corporate bonds. But the general trend is to exit government debt everywhere.
Are central banks likely to be buying more gold?
They've been trying to diversify. The problem they have is that, the euro eliminated 28 currencies. So with the euro in such dire straits and behind the curtain when I talk to lots of people, they're like, when is this thing just going to collapse? They have no faith in Europe. So what's your alternative? They have no faith in the yen, and it's been basically the dollar. That's it. So they either have purely dollar cash, or they have to diversify to some degree. And so they've been buying gold, but they've also been buying equities. Central banks have been buying equities for the last 3 years, and it's quite interesting that central banks are actually buying this stock because they have nothing else to buy.
Is money moving into precious metals?
Just retail yet. Like I said, we still have a lot to get through yet, and you got to get through basically around 1370 in order to say, hey, look, it's looking pretty strong. Until it does that, it's just going to be choppy and consolidating. And it's just going to wait for, something to crack. And effectively, you've got a crazy election coming up in October too, and then we have the 2020 elections in the U.S., and quite frankly, our computer is showing it's going to be back to like the 60s as far as violence is concerned. Neither side is going to accept whoever wins. So politics has become too polarized, and you look at with the Democrats are doing. No matter if Trump said the sky is blue, they're going to say no, it's black. And they've crossed the line here. And so fine, you want to pretend, oh, he's horrible, and we're going to object to everything he does. Okay, fine. So now you get back into the White House. The other side's going to do that to you. So what we're looking at is government has lost the ability to even function. There is no bipartisan effort. We're just looking at gridlock.
Too much pointing fingers at each other and not enough real government work trying to improve the economy.
Yeah, I mean, I'm really concerned about who really comes after Trump, honestly, because, I mean, at least Trump was from the private sector. I don't know anybody in the private sector is willing to step up anymore. And after what they've seen, what they've done to him, I mean, even look at the Kavanaugh hearings. And now they're going after the Democrats in Virginia on blackface stuff. I mean, if you're going back into high school yearbooks to go after people, I mean, it's crazy. I mean, who's going to run for anything?
Or anyone who's decent.
Exactly. I mean, it's just nuts. And they don't get it either. I mean, this girl in New York, Alexandra, I mean, why did she win? They interpreted, they want more taxes and more socialism. No, they don't. I mean, her idea of, we're going to have she wants this new Green Deal, what is in it? Eliminate all air traffic? Eliminate cars? What, do we kill all the cows because they fart? I mean, it's just insanity. I mean, she was tending bar. Okay, that's it. I mean, she has no understanding of the world economy. If she wants to actually eliminate all air traffic, I mean, come on. What are we going to do? Go back to the Stone Age here?
Well, I think a lot of cars on the road would pollute more than one airplane.
It's just, the whole thing is just completely nuts. And, I mean, you can go back to I've posted things on this. I mean, it used to be, up into the 70s and before Al Gore, all the scientists were warning about global cooling. And then Al Gore comes in, he flips it and calls it global warming. Why? He made $300 million off of this. Okay, he's a very rich man now. But what's the issue? All right, if it's global warming, then we can blame people. And then that gets government to raise taxes. If it's global cooling, then what are we going to do? Send a bill to God and say, hey, this is all your fault? Where's the money? That's it. Just follow the money and you'll see.
We'll have more with Martin Armstrong when This Week in Money returns.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange symbol CYP, the pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Martin Armstrong. Martin, are base metals a good place to be?
I mean, it really depends. I mean, if you have to also look at liquidity and what can you basically, when you need cash, can you get out of something, or are you going to buy something you can't get rid of? I mean, there's a certain practicality you have to look at. I mean, you can make a case for just about anything. I mean, if you bought a loaf of bread in 1932 for 5 cents, gee, you could sell it for $1.50 today. The problem is it wouldn't be any good, this after 1932. So, everything has a practical shelf life or whatever. Equities tend to be the best because it's more of a market that's international, and you have to look at where is the big money going to go. The amount of money in government bonds versus equities is about 10 to 1. So as the big institutions are realizing that they have really no place to go with the government side, they have to move to equities. That's it. That's the only place they can put a lot of money. Even the big pension funds and stuff, they can't really buy physical gold. They can buy the gold stocks. But, then you have to get into storage. Storing, they don't make profit on it just sitting in a vault. They have to have a performance. And if their performance one quarter is less than somebody else, they'll move the money from one fund to the next. So that's why they tend not to get involved in physical storage of commodities. They have gone out and been buying, for example, farmland. And mainly, why have they been doing that? They rent it out. And they're getting 5% yields. So, that was a alternative to low interest rates. So they're not dumb. I mean, yes, some of your base metals will go up, but, is it really a place to hang your hat? Not necessarily. I don't see the economy as really expanding either dramatically in the future. I mean, we're in you can go to our site. We've published GDP numbers. I mean, GDP has been a declining trend ever since the 70s. Just look at it now. I mean, they cheer and wow, we got they're hoping for 3%, growth. I mean, it used to be 8%. Interest rates used to be 8%. I mean, we're getting accustomed to lower and lower numbers all the time. And, that's the problem. So from an investment side, I would stay more with the precious metals rather than any kind of the base metals. I mean, you want to trade something, that's one thing, but actually buying it and storing it, no, I wouldn't do that.
How's the bond market holding up?
Right now, it's still the U.S. bond market is holding. That's about it. But we expect that to probably start to go down. As an example of politics, I mean, here you have all the Democrats yelling about Trump's wall. Oh, this is a waste of money, $5.7 billion to build this thing. We spend $6.7 billion on interest per week. Nobody talks about that. $5.7 billion, it's irrelevant in the budget. It's absolutely irrelevant. It's not even 0.1. So it's just politics. That's it. And they have to defeat him on that because that's what he ran for, as one of his campaign promises. So they just want to then go, see, he couldn't even get that. He lied to you, blah, 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 whatever. That's all this is. Economically, it doesn't mean anything, and, nobody wants to really talk about the real problems. So,
what do you see happening with interest rates for the rest of the year?
Well, the Fed is under pressure to not raise them right now. What will happen is, as the stock market starts to take off, and we're looking at, into next year, then you're going to have the Fed coming under a lot of criticisms. and particularly from the Democrats. They're going to be yelling and screaming at them, saying, "Oh, you're keeping interest rates so low, and you're helping the rich make all this money, blah, blah, blah." And so then that will put pressure on the Fed to actually raise interest rates. So as the stock market does begin to move up after this year, they're going to be forced to actually chase the market to try and stop the speculative boom.
Are banks constricting credit?
Yes, I mean, you're going to see more and more of that. The banks are only willing to lend money when people don't really need it. As soon as it looks like they need money, they don't. The biggest crisis we have is really like student loans and things of this nature. They got the Clintons to hand them all the students platter. The theory was, they have no collateral, so they charge a higher interest rate. Then they got them to the government, exempted them from, any kind of a bankruptcy. So they are really, it's like debtor's prison. And then what the bankers did was very clever. Then they come back to the parents and they go, we want you to co-sign. So the parents that have co-signed for their children, they now can go after the parents, and the parents can't declare bankruptcy on that loan, so they can take their house. It's a backdoor way of eliminating bankruptcy. And this is what's happened.
What's the latest on real estate markets in the U.S., Canada, and around the planet?
Not real good. You're seeing that, the markets that have rallied have been more or less those where foreign capital has been coming in, like there in Vancouver, etc. But the regulations are going after that, so you're starting to see that decline everywhere, from Hong Kong to London to Canada, United States. Property values are starting to go down in the main areas where the foreign capital was coming in, which was Miami, New York, LA primarily. The average house on the street, that did not really recover from 2007. I have a friend who's in the real estate market in New Jersey. He said if the houses ever got back to 2007 level, he says he thinks half the state would be up for sale. But, real estate is still going to be under pressure. And then don't forget, once the banks stop really lending the long term, and people don't want the long term because 30-year mortgages, 30-year bonds, people wonder what's going to happen next year, no less 30 years from now. So as that confidence begins to decline, it's collapsing quite rapidly. Really now the 10-year bond is pretty much it around the world, and that's coming in dramatically too. So your duration's going to shorten, and as that shortens, then you're going to see the interest rates rising.
The People's Party of Canada, led by Maxime Bernier, is a new conservative freedom party that's for lower taxes and less government with the Canadian election in October. Are they the right party in the right place at the right time?
Probably, because you're just looking at, it's what a lot of people call the Trump revolution. It's not something that he did, but it's just that whoever is in power, throw them out. Even that girl in New York, Alejandra, the reason she was elected was the same thing. It was that, yes, there was a career politician there. They were sick and tired of him. Everybody thought he was going to be the new Speaker of the House, and she beat him. It's not because of what she said. It's just who's ever in power, throw them out. You're seeing the same thing in Netherlands, in Italy, Spain. It's global. So this is what part of the yellow vest movement is. They want Macron out. So we're looking at real political change across the board globally, and it's becoming extremely polarized.
Are people fleeing high-tax jurisdictions to lower-tax jurisdictions?
Oh, absolutely. All the census shows that California, Illinois, New York, Connecticut, New Jersey, etc., all the high tax states in the U.S., they all have net loss of population. I mean, the governor of New York even ran an ad, in Texas and saying, "Oh, well, we have this, that, the other thing," and the governor from Texas ran an ad in New York and saying, "Hey, come to the, move here. We don't tax income." It's getting to be really quite dramatic, and you're going to see it more and more, and particularly as we find more and more people are able to really kind of develop their income from online type things. We're having, it was like the number of stores that are closing per month is quite dramatic. So people are just buying. I mean, even Walmart is not going to be really opening stores anymore. They have shown that their online sales increased 46% last year.
How bad is China's economy, and could it get worse?
Yeah, the biggest problem in China has been a lot of the debt on the in companies as well as the provinces. And what they did, they made pretty much the same mistakes that just about everybody else did throughout the decades. They went and they thought, okay, fine, we'll borrow in dollars because it's cheaper in interest rates, and they didn't take into consideration the fact what happens if the dollar goes up. This is what's tearing Europe apart. And they just don't get it. They really don't. You take all of Southern Europe. Why is there such a crisis? To join the euro, they wouldn't consolidate the debts. So now you had to take your old debt and you converted that to euro. Then the euro doubled. You now owe twice as much. What if you borrowed, for your mortgage in U.S. dollars, and dollar went up 20%? You owe more. This is what they don't get, and this is why Southern Europe, it's really in trouble, and this is why you're seeing separatist movements rising. The euro did not benefit Southern Europe at all. And if you're talking about Spain, Portugal, Greece, Italy, they all ended up getting the raw end of the stick.
How did China gain such a big trading advantage in the world, and can it continue?
China is a lot smarter than people realize. The federal government is much different. I was quite surprised. I was actually one of the people invited over there to help, become capitalist. I met over there with the central bank back in '97, etc. And it was, at first I thought, okay, fine, there's another central bank I have to go meet. And I thought it's going to be boring and just listen to a bunch of bureaucrats, etc. And the people I met all had experience. They had sent them out and they worked on dealing desks in New York and London and Tokyo, etc. And then they went back to run the central bank. They basically have been learning from actual experience rather than out of a textbook. So, China is now realizing, why is the U.S. the world number one economy? And that's because it has a consumer base. That's why everybody wants to sell to the United States, because they want to tap into the American consumer. Germany wants to sell all of its cars, etc. Now, what's the problem? Germany has a real problem economically because its entire model has been that from the 1700s. It's mercantile model. In other words, we have to manufacture, sell stuff to somebody else, and then we become rich. Whereas the United States, the economy became the biggest because it was self-contained. China now realizes this, that, hey, trade is not the way to go. We have to have a domestic economy first. And if you build up the domestic economy, that is how China will end up surpassing the United States. They understand this now, and that's what they're focusing on.
Do you see China surpassing the U.S. economically anytime soon?
Yes. I mean, China will become the number one world economy, after 2032. The West has got to collapse. Look, China and Russia collapsed in '89 from this Marxist theory. All right, we have still followed Marx. It's socialism, and our system's collapsing as well. It's just, it's just our turn.
Is President Trump likely to make changes on how the Federal Reserve operates?
No, not really. Trump has a lot of business experience, which is much better than probably anybody else there in Congress, but he is still unfamiliar with international interest rates, capital flows, etc. So he doesn't quite get it. The meetings that I've been in, the real concern is how to stop the dollar from becoming the reserve currency. And people don't get that. I mean, the Federal Reserve has been lobbied by everybody, the IMF, Europe, emerging markets, etc. Why? Because they're saying, don't raise interest rates because that impacts us. So what's happened is that the central bank no longer can manage the economy for domestic concerns. It's lost domestic policy to international policy. So the Federal Reserve has really become the reserve bank for the world. And you can't have all these other countries saying, don't raise interest rates because you'll hurt us. And then that means it can't do anything domestically because it's got to worry about somebody else. So this is the problem. And the Fed, the only way to eliminate it is to eliminate the dollar as a reserve currency. And I don't see that happening before 2021. But it's going to take more of like a Bretton Woods type thing. You have all these people that keep saying, the dollar is going to crash and all this other kind of stuff. And they don't even know what they're talking about. I mean, they keep saying, the U.S. debt's at $20 trillion. And they don't even look at this. I mean, Japan's debt annually is over 100% of GDP every year. Switzerland, same problem. Japan actually bragged that, with their quantitative easing that they bought 97% of the bank auctions. So that's a good thing. That means nobody in the private sector is buying your debt. So this whole thing is just a real crisis just waiting to happen. And people don't quite understand what's going on with the central banks or how it's, what's taking place. I mean, I actually meet with central banks and they wouldn't believe what goes on. I mean, there's arguments on the board between each other. I mean, this is it. I mean, I've been in banks and they're saying, see, this is why I tell you got to bring these guys in, I mean, this is what goes on.
We keep hearing about corruption at all levels of government. Is there any way to end that?
Not under the current systems, no. As long as you have a representative type of government, a republic, all republics historically always fall into oligarchies. That's it. A real democracy, which we do not have. The Greek democracy was, yes, women didn't have the right to vote, but neither did anybody else in the household. Only the head of the house went down and voted. So he was like the congressman, okay? You didn't have a representative of 100 houses going down. Each house actually voted separately. And you really didn't need a right to vote when the government couldn't do anything to you. There was no income tax before 1913. None of this social stuff. Oh, you can't have abortion. Once you started getting into all this socialistic stuff, now they can affect absolutely everybody. So your wife needs a right to vote, your children need a right to vote, everybody does. Because now government is in everybody's nose. That's it. And that's why it's not going to work, because republics always fail. Because you have one representative that represents everybody there in Vancouver. Okay, well then somebody comes up and says, hey, listen, I'll give you something on the side, vote for this. And they do. It happens all the time.
What's the latest on Brexit?
I mean, honestly, it's a higher probability that maybe you're going to end up with some sort of a hard exit. There's negotiations back and forth constantly, but there's a classic example. I mean, you can look on our site. I published a chart right from the government's own database, and it shows that GDP growth in Britain peaked the year before it joined the EU. Once it joined the EU, it's been nothing but a bear market ever since. They have never won a single court case. The Dutch can come in and fish right up to a few miles off of the coast of England, but England can't go over there and fish off the coast of the Dutch. I mean, they lose every possible thing. And quite frankly, they don't like the Brits. They never have, because the Brits are what had to come in and save Europe. And so they resent that. When I go to meetings with central banks in Europe, I mean, our CEO in the European division we have is British. I can't even bring him. It's like, no, sorry. They'll talk to me because I am not European. Therefore, my word is a lot cleaner. And the same thing happens in Canada. But if I bring a Brit in, oh, well, you're always going to talk versus Britain versus, that's just the way it is.
Well, Britain had to save Europe from itself 3 times. People forget about the Napoleonic Wars.
Yes, and they resent that.
Is socialism
they really do resent the British.
Yeah. Is socialism being defeated around the world?
Yeah, I mean, it's not sustainable. I mean, you have, the audit of Illinois have shown, there's over 19,000 government employees earning more than 100,000 in pensions annually. I mean, the pensions these people get are just unbelievable. I have a friend whose mother was a school teacher in New Jersey. Not only does she get the pension, but she gets free health care for herself and her husband for life. I mean, that's worth at least 30 to 40 grand a year. The rest of us can't get this sort of thing.
Have you bought an electric vehicle yet?
Actually, I do have a hybrid. But it's a hybrid. It's a BMW, which has 2 engines to it. And I do like it a lot. I mean, but it's I wouldn't buy a complete electric car because largely you're limited to 200 to 300 miles. That's about it. So if there really was a crisis or something, how do you get out of town?
How can people find out more about your upcoming conference in Rome and also about Armstrong Economics?
Well, you can go to our site. I mean, it's armstrongeconomics.com. Our Rome conference is going to be timed with the May election, so it's going to be quite interesting. But, I mean, Rome is a great place. Last year we had it in Singapore. We had a lot of complaints from Europeans saying, gee, you never come over here that often anymore. So it's been like 2 years since we did one in Berlin. So this time we're going back to Europe. We're doing one over there in Rome, and then our annual one that we do in the States is in Orlando. They've turned into more of like a mini UNs. We had last conference we had 37 countries represented. I mean, they fly in from everywhere. And it's something that's different, that you can actually see the capital flows in the room, basically, and a lot of people make international friends, and this is what goes on. It's been very interesting over the years. We've been doing these since like 1985. And we have, central bankers and insurance companies, everybody. It's a very interesting crowd.
Martin, thank you so much for being on This Week in Money.
Well, thank you for inviting me.
My guest has been Martin Armstrong, founder of Armstrong Economics, online at armstrongeconomics.com. He was speaking to us from Florida. Coming up, Inside Track President Eric Hadik, next on This Week in Money.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm speaking with Eric Hadik, CEO and President of InsideTrack.com and InsideTrackTrading.com. Welcome back to the show, Eric.
Oh, thanks for having me back, Jim.
Eric, when it comes to the cycles that you track, what do the equity markets look like?
Well, from a broader perspective, I still contend that that we're in a drawn-out topping phase that will probably see another leg down later in the year. But on intermediate cycles, there were so many coming into play in late December, and that just projected anywhere from a 2 to 3 month upwards to a 3 to 6 month bottom. So I think we're going to continue to trade between those parameters. And that's where I really, cycles kind of give me a backdrop, a little bit of a framework to work under, but then it's price action that's so important for me. And my 1 to 2 month upside price targets have been to see the major indexes get back up towards their early December highs. And we're just seeing that now. The Dow Industrials just attacked 25,980, which was that early December high. NASDAQ 100 futures that I watch, I've been looking for them to get up to 7,100 plus or minus a few points. And that would usher in a higher probability for a couple week peak, but I still think that we could see a pullback from there, and then some more upside later on in the coming months.
What about the junior markets, Russell 2000?
I don't stay on top of that as much, and it has rotated at slightly different cycles. Sometimes that gives me a good indication of turning points when there's some divergence, but the key levels are still similar, and the Russell is getting back up and attacking that early December peak, so it's a similar scenario, but it has been overall just a little bit weaker set up. And one of the other indexes that is more little more comprehensive of larger and smaller cap stocks. The NYSE index, throughout all of last year, that was giving me some early warning signs as well. That market never exceeded its late January 2018 peak, and when it was rebounding in September, that divergence was also helping to warn of a new wave down when a whole preponderance of cycles was topping in late September, early October. So those indexes give me a little bit of sometimes early warning signs or exhibit some early weakness that may not be seen in some of the broader or some of the bigger indexes. But beyond that, they're pretty much oscillating on the same rhythms and the same cycles.
Now, the market right now, does it look like past cycles? Could you pick a past cycle where this might be similar?
I wouldn't say there's a lot of similarities. I have, on a very broad basis, I've talked about the general expectations for 2018 to 2022 having some similarities, or me expecting it to have some similarities to 1978 to 1982, linked to this 40-year cycle that has been so uncanny throughout the last couple hundred years, really, from an economic standpoint, from a currency standpoint. But 2018 certainly fulfilled some of that, with the major swings being almost in lockstep to what they were 40 years earlier. In 78, you saw a quick, sharp sell-off into February of that year. In 2018, you saw the same thing. In 1978, it then underwent a progressive labored advance into September, October of that year. Same thing in 2018. Then we saw a quick, sharp sell-off in the fourth quarter of 1978, just as you saw in 2018. And even the January 79 and January 2019 rebounds were similar. So from a general broad stroke perspective, there are some expected similarities there. And one of the other similarities I discussed over the last year or so was that I thought this 3 to 4 year period would see multiple 10 to 20% sell-offs, but not nearly as likely to have a major decline beyond that. And that was similar what you saw in 78 through 82. There were, I think, at least 4 10 to 20% sell-offs, and then 82 was when the market, kind of that whole bottoming phase ended, and you entered a new bull market. And you could see something similar in the coming years, with some more 10 to 20% sell-offs scattered over the next couple years. And then, if it's held certain levels, you'd be in a position to start another larger uptrend.
Now, of course, the period you described, 78 to 82, is a time of rampant inflation. Although the government changed the way that inflation is calculated now, they threw out housing and fuel. Do you think they should include those figures when they're calculating inflation so that we get a true picture of it?
Well, I think enough economists and analysts are aware of those factors that even if the CPI and PPI don't show those kind of moves on the surface, there's enough of an awareness nowadays and enough information out there that whether it's included in those indexes or not, it's going to be factored in. And you also see, how the Fed's responding to all of the economic indicators that they have at their disposal. So, I mean, that is the the increasing interest rates on a much different magnitude, obviously, but that's another similarity between late 70s and late 20-teens, where you saw some steadily increasing interest rates. But there again, I stress that it's only some broad stroke comparisons, not not looking for interest rates to skyrocket like they did back then, or inflation to see the levels that it did back then. But just some similarities.
Are they better at controlling inflation now than they were back then? Because I remember at the time Prime Minister Pierre Trudeau putting in wage and price controls, and I bought a Canada savings bond that paid 21% interest. We don't see anything like that nowadays.
Yeah, I think you certainly have the Fed and other authorities keeping a much closer pulse of the market, and still often more sensitive to signs of inflation, and that's why you've even got this raging debate of late where some accusing the Fed of raising a couple too many times and too quickly, and not responding to some of the deflationary factors that were creeping up. But underlying it all, I think there still is there's signs of growth, and so you're going to see that. In fact, even in the last day or two, when the Fed was releasing minutes, all of a sudden one of the perceptions was, oh, wait a minute, they don't sound quite as dovish as they did back in January. And even though it's just subtle wording difference, it's already showing that awareness that, okay, the markets seem to have recovered, so we're more concerned with things overheating than slowing down.
We'll have more with Eric Hadik when This Week in Money returns.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Eric Hadik, CEO and president of InsideTrack.com. Eric, what's your outlook for precious metals?
They're actually coming into a very intriguing time from a multi-month, multi-quarter basis. Gold and silver are now entering in late February, early March, a time frame that I've been focused on for over a year. And in order to really kind of appreciate that, I'd have to explain a few of the swings that we've seen in gold over the last 8-9 years, really. And gold has just adhered so closely to this. It's an approximate 13-month cycle. It ranges from 55 to 59 weeks. And when I'm looking at any cycle, I've got a what I call a cycle progression tool that explains how markets will oscillate on these cycles, but also shift from highs to lows and back to highs. That there's a very fairly standard rhythm that you see, and in many cases you will see, like in a topping pattern, you'll see 4 successive highs, first some higher highs, then a lower high, and then whatever that particular cycle is that's governing those highs will then shift to some successive lows. You'll see a sharp down move after the 4th high, and that's when the cycle inverts, and it times an initial low, then a little later probably a lower low, then starts to bottom out, and you see those lows start to ascend from that point, and so you'll often get a series of about 4 of them, and then it will again see an uptrend and shift to successive highs. With that said, if you go back to gold and look at this 55 to 59 week cycle, approximately 13 months, and you go back to its major peak in August, September of 2011, then at that same rhythm the next year in October 2012, and then successively in 2013 you saw successive highs, and then the market really saw its the next phase of its downtrend, and that cycle shifted to successive lows in 2014, and then your most significant one in December of 2015. Then you started to see these successive bottoms, and you saw another low, a higher low in late 2016, early 2017, and that was as the market started to recover from that, and we were coming into early 2018. I explained how late January, early February of 2018 was the next phase of that, and I was expecting to see a 6 to 12 month high. And gold and silver surged into late January, and then signaled that a top was in place, and started to sell off. And right away, I started discussing how the next phase of that cycle would come about in late February, early March of 2019, and that's when I would expect to see a high of similar magnitude, something that holds for at least 3 to 6 months. And so gold sold off from that late January peak. It declined for exactly half of that cycle, which you'll often see, had a 27 to 28 week decline into mid-August, and along with many other cycles was expected to bottom there. And since that bottom, my focus has been for an overall advance into late February, early March. So we're into that time frame now, and it's been a focus for a long time, and now I'm starting to look for price action to corroborate that, to indicate that if and whether these cycles are still just as impactful as they have been. And so gold just shot up to some monthly projected highs and some wave targets around 1350, and I'm watching to see if that ushers in any sort of top here. I need to see several signals before I am convinced that a top is forming. It could still surge higher, especially when you get to the end of a cycle. That's when you often see your parabolic advances or your very sharp spikes up, even like they saw in last January of 2018 leading into a high. And so something similar has been expected now, with an initial peak in late January, early February, and then a final peak in late February, early March. So all that to say is we're coming into a very decisive time when I think we could see a pretty significant top in gold. And that would most likely usher in more of a consolidation phase for a few months, because I think that gold and mining shares are in the first 6 months of what could be a 1 to 2 year bull market. So that top, even though if it does adhere to what I'm expecting, and we see a multi-month top set soon, it doesn't mean that you suddenly shift into an all-out bear market. Just means that the market needs to back up and kind of set a higher plateau before it's prepared to undergo another similar advance.
Would the same cycle apply to platinum and palladium?
No, actually, they are in. They've shown significantly different cycles where they are oscillating on much different rhythms. I've even talked about platinum through this whole time since its early November high, that it really doesn't bottom out, or cycles don't bottom out until April. So it has been on more of a overall down cycle from early November, and I think it'll extend into early April, even as gold and silver and mining shares have been recovering and palladium's been far more bullish. So they each have their own rhythms, obviously each have different fundamentals governing them, but there still is a important use of those diverging cycles, and one of the things that I'll be looking for is if gold and silver do peak here and begin to correct, if they show signs of a secondary higher low in that early April time frame when platinum's expected to bottom out, that would be a key divergence there, and something that might set up the potential for a new buying opportunity in gold and silver.
We'll have more with Eric Hadik when This Week in Money returns.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back to This Week in Money. We're speaking with Eric Hadik. Eric, what's the outlook for oil?
Oil has been oscillating very closely with equity markets and following some of the same cycles. Both were peaking in late September of last year. Both bottomed out in late December. And so I think that oil is certainly in a recovery mode and will probably be a bit similar to stocks, where maybe we see a little bit of a pullback from near current levels, but there are some trend indicators that tell me we should see another wave up in the coming 1 to 2 months. So I think it's in some recovery mode, but that's also in the context of having set a major, what could be a 1 to 2 year top back in third quarter of 2018.
Eric, I know you also follow other cycles. You have a war cycle, a conflict cycle. Where are we in that, and what's ahead?
Well, that's a very broad thing as well. I still am looking at 2021 as being a watershed time where that's concerned, and expecting to see slowly escalating things moving towards that. So it's more at this point just kind of watching the signs out there, and as we get closer to that time frame, seeing if it's validating what is expected.
Do you have any idea what would trigger that, and why would you feel that that's going to be the peak time? What are you looking at?
Well, one of the things I described was an 80-year cycle that we have seen in our country, and it even goes back well beyond that or before that. But 1781 was the culmination of the Revolutionary War, and 80 years later in 1861 was the onset of the Civil War, and 80 years after that in 1941 was our entrance into World War II. and 2021 is 80 years from that. In between there's a 40-year cycle that governs everything from, like I said, currency to economy to even food and crop cycles to conflict cycles as well. And you even look back to 40 years ago, and there were certainly some big triggers in 1979 with the Iran and the Islamic Revolution, and 1980 with Soviets in Afghanistan. There were things that even laid the foundation for the next 40-year cycle, and you often see things like that. You can look back to a previous phase of a cycle and see that events that happened then and reactions to those events actually ended up laying the groundwork for the next phase of that cycle.
Do those cycles change the way that you invest?
I use cycles as, like I said, a backdrop, and when you get down to short-term cycles, they certainly influence some things I'm doing, but I employ some very specific and far more objective technical price-based tools for entry and exit in the market. So even though I am watching those cycles closely, they help me with when I may look to being a little more aggressive or a little more passive in certain trading strategies. But I would never recommend trading just off something like that unless you're talking about just multi-year, more passive investments that would have some correlation there.
The U.S. dollar, what kind of a cycle is it on right now?
It has continued to gain from last year, but I am thinking that it's getting very close to a 3 to 6 month peak, and could see some correction from there. But it continues to be in an up cycle, even though, and that's when I'm talking about the price of the dollar or dollar index versus other currencies. From a fundamental underlying perspective, then you get into this 40-year cycle of currency wars that I'm continually discussing, and I think that this whole period from 2013 to 2021, which is the next phase of this 40-year currency war cycle, I think has been an ongoing whittling away at the dollar and dollar standing, to where as we get to the end of that cycle, we may see more overt manifestations of that battle and of that whittling away, where then the dollar starts to become a lot more precarious and enter a phase where it could be in more trouble.
Eric, thank you so much for being on This Week in Money.
Thanks for having me back, Jim.
My guest has been Eric Hadik, CEO and president of InsideTrack.com and InsideTrackTrading.com. He was speaking to us from the Chicago area. And that wraps up our show for this week. We'd like to thank our guests, Bob Hoye, Martin Armstrong, Eric Hadik, and thank you for listening. If you have any questions for the show or our guests, you can send them to info@howestreet.com. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Well, Jim, it's
always great to be there.
Larry, some more interesting stuff from the world of recycling.
Yeah, well, the press is coming out, that's for sure. We were kind of the Lone Ranger out there talking about recycling. Things that they're talking about now, we were talking about 2 years ago and being shot down on by, various investment letters and people following the industry. But that's changing. And, now I'm getting concerned from shareholders about how our patents are protected. And, once you get issued a patent, that means that, or you're approved on a patent, that means that, nobody can use or utilize any of your intelligence to build their own plant, because what's good of a patent if somebody could? So I just want to assure everybody that we're well protected in that regard. It's an exciting time for us. We've had a couple of visits to the plant already, and even a third-party visit. There's real interest in what we're doing. We're talking to bigger automobile companies. Recently, we've been talking to them, and we couldn't get an appointment with them 2 months ago. So it's exciting for us and the shareholders. It seems like a long time, but in reality, when you're looking at research and intellectual properties, it's a short period of time. And we can see the light at the end of the tunnel, and I'm sure the shareholders are starting to feel that way as well. So I just wanted to soothe any anxious feelings about our patents, and there's nobody else has applied for any patents recently. There's been a few patents that have been applied for and granted to that do not cover the full scope. And there's going to be more and more people. It's going to get to be crowded. And, people wonder, well, gee, is somebody going to come along with something better? Well, yeah, perhaps, but I don't see that happening for a few years. And but how can you beat out 100% recoveries? That's pretty difficult to do. We know what our reagent costs are. They're very low, and we could actually feel that we can lower those costs. So I think we're going to be a big player in the market. Is there going to be other players? Well, let's look at a report that I just read here a couple of days ago, and it's from the battery recycling, and it's talking about a $17 billion market is what it's really talking about by 2027. That's a lot of money. If you try to put that in perspective, that's 17 billion, that's 54 mines operating at 500 and producing $500 million worth of product a year. That's how big that market is. Now, mind you, it also includes the lead-acid batteries, but the ones that the recycling is going to overtake and be most profitable is going to be the EV, the lithium-ion batteries. So 17 billion with a CAGR of 24% from 2018 to 2027. What do I see? I see a big future. What else do I see? Well, I see there's room for everybody, even for technologies that may not be as efficient as ours. But if you want cradle-to-grave solutions, you should, contact the company, because that's where we're headed. We're headed for cradle-to-grave solutions, total circular economy. The environment is the first concern, and now we are in the process of saying, hey, how much money could be made off of this, and that's what the pilot plant's all about. We'll be able to work out some final numbers on OPEX and the actual building of the plant, and we got some rough numbers out there. I hope we've erred on the side of caution, so that they're greater than we anticipate. But all I can say is that we are really in the driver's seat for the time being. Now, Another concern is the new types of batteries that are being talked about. Well, all I know about battery manufacturing is that everybody's tooled up for lithium-ion batteries, and any new battery technology is going to take a few years to commercialize, and then you have to look at what are you going to do about your existing facilities. Well, if it's a total new solution that's not even using the cathode materials that we are, then that means that multi-billions of dollars of reinvestment into the battery manufacturing. So, lithium-ion works, and it's proven. It only came into being in the last 5 or 6 years for EV cars, and now it's taking off. And it's been a long process in getting there. I think at the first time it was ever lithium-ion batteries were used was back in the 70s. So, if you look at that and you say, well, it's 50 years in the making, what's a new technology going to take? So I think you can, don't lose any sleep over any new technologies. They'll be quite a while before they're ever commercialized, and we will have, I hope, 100 plants into production by that time. And it would be just, something that's not worth losing sleep over. And, Jim, I could go on and on and on here, but we will be attaching things to our podcast, and I don't want to take up everybody's time.
Larry, for people who are new to American Manganese, what are you all about?
We're a critical mining company that has been developing technologies for the last 10 years. First being manganese for our manganese deposit, and we spun off. That was the cornerstone of our recycling, and now we're reaching new heights. Our contractor, Cometco, is coming through with all the results that they promised, and we couldn't be happier on that. American Manganese is traded on the TSX Venture Exchange under the symbol AMY. It's traded on the U.S. Exchange under the symbol AMYZF, and it's traded on the Frankfurt Exchange under the symbol 2AM. We have all kinds of information for people that want to do due diligence on the company at AmericanManganeseInc.com. You can contact me at LREAUGH@AMYMN.com, or phone the company at 778-574-4444.
Larry, thanks a lot for the update.
Well, you're welcome.
I'm Jim Goddard. I was speaking with Larry Reaugh, CEO and President of American Manganese, on February 22nd.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.